Hi guys, welcome to another YouTube video, another tutorial. I hope that you are doing well, staying safe. Today we'll be doing trading profit and loss and the types of errors. A trading profit and loss is used by an organization to assess its performance. So they use this statement to see how much profit they have made for a financial year or how much loss that they have suffered based on the trading activities of that organization. There are 5 main errors that often occur in an organization, and I will be speaking on them shortly. Errors are unintentional and they mostly occur when persons do not have enough knowledge to treat certain transactions. Here's a format of the trading profit and loss account. Get yourself familiar with it so that when you're asked to provide a trading profit and loss account, you know exactly how to lay it out. I hope that you realize that there is one main item that is missing from this format though, and that's the heading. Warning, don't ever forget your heading. Now the heading has 3 main items, and that's the name of the organization or the person if it's a sole trader business, the name of the statement, which is trading profit and loss account, and the year-end close. The year-end close is the end of the fiscal year or the end of the financial year. Usually it's sometimes December, but you have cases where some organizations have the year-end close as a period or just a month. Then you would put it based on what the question asks. So if it's a case where the question asks for a specific month, then you would put for the month ending, and that's the last day of the month and the year. If it's asking for a period, then you would put for the period and you will write the ending of that period. Here's an example of how you would write the heading of a trading profit and loss account. So now that you guys have an idea what the trading profit and loss account is and what it consists of, let's look at this question. Now this question is just asking for the trading account, and the trading account is that portion of the trading profit and loss statement that stops at the gross profit. Take a few minutes, read the question, see what it's asking for, and highlight the main areas that you think are necessary in completing this question. Take a look at the solution now. There are 3 items in the solution that was not in the format earlier, and that would pose a challenge if we were to swap the format. Now, knowing the nature of these items and what they are will allow us to treat them the right way. Return inwards, for instance. J. Grant made a sale. The customer returned the item, and so he no longer have the dollar value in sales. So the sales would reduce by that amount. Return outwards is the flip side of it. But it's J. Grant that made the purchase. He's the one that returned the item, and so the dollar value in the purchase is no longer there. So we have to reduce the purchases by the return outwards. Carriage inwards is a part of cost of goods sold, and so it's added in that section. So that's it for the solution, guys. Ensure when you're creating your trading profit and loss account, you have your headings, underline your subheading that are in the format. Ensure you double line your final figure, know your format, and know how to treat each item in the trading profit and loss account. Now it's errors time. Here are the 5 errors. Errors of commission, errors of principal, errors of original entry, errors of omission, and compensating errors. Now all these fancy names, and we still don't know what they are. Like, what are these? Starting with commission. Now this is when an entry is made but is entered in the wrong account. And here is an example. A sale of $30 to John was entered in Jane account. So instead of John's account, it's in Jane account. Errors of omission. This is when the entry was not included in the books at all. And here's an example. A purchase of an equipment by cash was not entered in the books. So the equipment account was not debited and the cash account was not credited. It was just not there in the first place. Error of principal. This is when the entry is made but it was placed in the wrong type of account. The example says that ABC bought a motor van and the entry was entered in the motor vehicle expense. Now instead of the motor van, which is an asset account, it's placed in an expense account. Error of original entry. This is when an entry is made but the amount that is placed in both accounts is the same, but it's not the right figure. A sale of $330 to J Grant was entered in both accounts as $303. And because it's incorrect in both accounts, it cancels out each other and it's very hard to identify. And the last one is compensating errors. ABC bought goods by cash, but the entry was placed on the incorrect side of both accounts. So if one account was to be debited, then it was credited. And if one account was to be credited, then it's debited. That's it for today, guys. Thank you for tuning in. Stay tuned to my next video, which will be on depreciation of fixed asset, how to treat it and how to calculate it. And also my upcoming video will be on bank refund. Stay tuned. Thank you.